A very good morning to everyone, both in the room and to those who's currently watching on Zoom. Welcome. Welcome to CBRE Cambodia's Market Insights for the second quarter of this year, 2022. I hope everyone had your morning coffee and tea already. And if you haven't feel like you had enough of your daily dose of coffee, please feel free to bring more of them into the room. My name is Pala, an analyst from Research and Consulting Department, and it is my honor to be your host for today's program. Today, CBRE Cambodia has the greatest pleasure of bringing back this very signature event in person after moving online for more than 2 years. We're extremely delighted to see so many familiar faces of the key industry leaders in this room today, as well as the new faces of professionals from across the industries. Now, I would like to also mention that we're also having more than 200 viewers on Zoom right now. So hello to those viewers on Zoom. I hope everyone can see and hear us clearly. As an introduction, today's agenda will kick off with the presentation of the real estate market within the 5 main sectors, ranging from industrial to landed property. We're having Mr. Lawrence Lennon, our Managing Director for CBRE Cambodia, Ms. Kinkesa Kim, our Associate Director for Research Consulting, and Ms. Daluch, our Manager for Valuation and Advisory Services. Following the presentation, the 3 presenters with Ms. Rainiang Chun will welcome the audience for the panel discussion. You can be part of the discussion by sending your questions directly to us on Slido. In fact, you can do that now. So to join, please scan the QR code on the screen here, or you can simply go to slido.com and input the code hashtag CBRE-Q2 2022. So I'm sure everyone is now very much eager to hear about the changes that matters during this Q and the remaining of the year. So without further ado, ladies and gentlemen, please allow us to welcome Mr. Lawrence Lennon to the stage. Mr. Lawrence Lennon, everybody.
Thank you for the warm welcome, Thala, and thank you very much for joining us today. It's great to see some familiar faces. The wonders of Phnom Penh real estate in the room today. I have a few good friends, a few neighbors, one of those interesting quirks of the market. My name is Lawrence Lennon, and I am the Managing Director of CBRE Cambodia. Today, I will present an overview of Cambodia's macroeconomy, followed by an insight into the emerging industrial market. Just checking on the right side. Our short-term outlook is possibly the best it's been since 2019, with all key indicators rising or stabilizing except for prime retail rent. This no doubt gives the indication of an improving situation. Nonetheless, we are of the opinion the situation is more of an amber light scenario. As a market, we have undoubtedly been feeling the pressure of the COVID-19 pandemic. However, it is vital to take into consideration the inevitable impact of new supply on these headline numbers. We must be mindful in understanding COVID has acted as a catalyst, speeding up the inevitable impact of significant increases in supply. My recommendation is to keep watching occupancy rates over the course of the year. H2 2022 presented many remarkable milestones for Cambodia, heavily down to the royal government's effective vaccine rollout, now at 90% full vaccination rate. Much of life in the kingdom has resumed most senses of normality. We also witnessed a slew of new free trade agreements, including RCEP, the China-Cambodia Free Trade Agreement, and several economic and tourism metrics moving in the right direction. The Ministry of Tourism anticipates 800,000 to 1 million tourists entering Cambodia this year, and the World Bank is forecasting 4.5% GDP growth rate in 2022. There were also significant developments in the push for the diversification of Cambodia's economy, with the announcement of 4 auto assembly plants and Aeon's logistics hub establishing Sihanoukville. We are hopeful on the back of the new investment law, the manufacturing segment will continue to flourish. This greater emphasis on diversification is a potential positive side effect of the pandemic, as the nation has been forced away from the usual sources of investment, hospitality, conventional real estate activity, and gaming, a possible blessing in disguise. Nonetheless, despite the positive, caution is advised, as we are possibly in the eye of the storm, with global recessions on the horizon, in contexts such as Europe and the US, both vital export markets. And equally, if not more important from an FDI perspective, economic decline in mainland China, with Premier Li addressing 100,000 party officials a matter of weeks ago on the state of the Chinese economy. On top of that, Cambodia has not gone unscathed in the context of global inflationary pressure. Talk with any construction professional in the room today, and they will mention costs rising between 20 to 30% over the course of the pandemic. As alluded to in the last slide, the kingdom witnessed one of the most effective vaccine rollouts regionally, if not globally, positioning second in the Nikkei Recovery Index in Q1 of this year, ahead of regional neighbors such as Singapore, Ho Chi Minh City, and KL. Activity has returned remarkably fast to all categories in the market, breathing life into tall and small buildings alike. No doubt, things are on the right track for tourism, for Cambodia's tourism industry, on the back of the vaccine rollout, significant new infrastructure development, and the general ease of entry. Coming out of the airport at the moment takes a matter of minutes. Last time I flew in from Vietnam, it took me 15 minutes to get off the plane and into the car. Though, as we are halfway through the year, it is clear the tourism numbers are yet to resume even close to pre-pandemic levels. The largest percentage of travelers arriving appear to be coming from Vietnam and Thailand, according to official figures. Those that are coming from further afield, anecdotally speaking, appear to be within the backpacker to mid-end category, meaning the more premium end of the market still has some time to wait before a true recovery returns. In addition, the elephant in the room, tourism in much of Southeast Asia won't come close to resembling pre-pandemic levels until the much elusive mainland Chinese market resumes travel. When this will return is anyone's guess, but I speculate this will start to thaw in Q1 2023. A major driver of activity in Cambodia and all real estate markets is the development of infrastructure. For Cambodia, this comes in the form of new highways, airports, seaports, and bridges. These improvements vitally help the nation's overall competitiveness, advance trade facilitation, and unlock new areas for real estate development. This can be seen prominently in relation to Phnom Penh, with the development of the new airport to the south, the connection of Koh Pik and Koh Noria, while the South Korea-Cambodia Friendship Bridge continues to be under study, which will connect the central business district with Choi Chang Va and Area Sat, undoubtedly spurring new real estate activity. Of all of the segments we will discuss today, the industrial and logistics sector provides me with the greatest sense of excitement. If there was a space the nation must continue to focus on for its wider economic development, it's manufacturing. Established in the right manner, it will be the economic engine to propel Cambodia forward. As was the case with Japan, South Korea, China, Thailand, and more recently Vietnam. If there is one sure way to spur development, it is this. The greatest lesson the pandemic has to give is the fact that we in Cambodia are not an island. The trends impacting Vietnam, Singapore, the US, and China are also relevant to Cambodia. The stresses China is undergoing in manufacturing, the surge in shipping costs, insufficient logistics capacity, and the mainland Chinese zero-COVID policy, these trends all impact our market. To such an extent, I was able to just take this slide from CBRE Global's Industrial and Logistics Outlook for 2022, and it wasn't because I was feeling lazy. it was to illustrate the point that these global trends also apply to Cambodia. Further trends that are impacting Cambodia and all global manufacturing hubs include the impact of continued supply disruptions, the war in Ukraine, the impact of rising inflation expected to be up to 6% in Cambodia this year, and rising interest rates. What I'm trying to get across is the fact Cambodia is maturing and increasingly becoming an interconnected member of a globalized world, which comes with both costs and benefits. This point is further illustrated from feedback to one of CBRE Global's industrial and logistics occupier surveys. It's clear that the prominence of Cambodia as a manufacturing destination is on the rise, with about 7% of respondents stating they had plans to enter the market. This was above Malaysia, India, and mainland China. In addition, less than 15% of those surveyed currently have an existing presence in Cambodia, indicating a strong potential for the future growth of the industrial and logistics sector. As the nation continues to develop its infrastructure, engage in developing the right policies and free trade agreements, this trend is only set to rise. The allocation of land for industrial and manufacturing activity cannot be disputed in Cambodia, with over 15,000 hectares of land available. By comparison to Vietnam's 46,000 hectares of land for industrial activity. The key question that we are struck with is, what is the current state of this land, and what framework is in place to help Cambodia increase its competitiveness within this space? On this theme of competition, we would argue the global trends of ESG are going to be more relevant to Cambodia's globalizing industrial real estate before any other segment in the market, due to the international nature of occupiers and their end market. Is the existing stock and the future supply prepared for these trends? Cambodia continually surprises me with its ability to leapfrog trends. Should we expect to see green, energy-efficient industrial spaces in the near term? It certainly would be one way to offset the higher cost of electricity in Cambodia. Similar questions and comparisons can be made around sales and leasing rates for industrial and logistics property. Cambodia's long-term lease rates range from $20 to $100 per square meter, in contrast to Vietnam's $100 to $200 per square meter for 50-year lease terms. While leasing rates for ready-built factories in Cambodia range from $2 to $4 per square meter, in contrast to Vietnam's $4.5 to $5 per square meter. We may be more cost competitive in these terms, but how do we compare in terms of construction quality, construction costs, electricity, and access to wider supply chain? How might Cambodia better compete in this international race to attract more sophisticated occupiers? And how might the government intervene to subsidize and better empower the rapid development of this sector? Could it potentially allocate land at subsidized rates in key locations to anchor industry players similar to Samsung in Vietnam to drive the establishment of new industries and their supporting supply chains? First controversial statement of the day. This is a very exciting category for the market due to the potential impact it can have on the nation and in turn hundreds of thousands of individuals it may employ. It is clear Cambodia's garment industry will continue to hold strong potential in the market in the short term, representing 44% of exports from Cambodia. Nonetheless, what we and all stakeholders hope for is a wider diversification of industrial activity taking place in addition to the garment sector, more automotive, more electronics, and of great importance, the development of an agro-industrial segment.
a real low-hanging fruit, with agriculture already representing 24% of GDP. In short, we're excited to see how things develop. Watch this space. I would like to pass on the proceedings to my colleague Daluch to present an overview of Cambodia's commercial segments. Thank you very much.
Thank you, Lawrence. And let's now take a look at the commercial sector, starting with the office market. So over the past quarter, the second quarter of 2022, we started to see the supply of office market coming into Phnom Penh starting to slow down. And there was no new completion in the past quarter, only one new launch. That is the FTB Tower, a Grade A centrally owned office building in Dong Pring district. And in fact, at the beginning of 2022, we initially expected almost 100,000 new net leasable office spaces to come online by the end of 2022. However, as we progress through half of the year, it's confirmed that about 60% of those expected future supply actually confirmed to delay into 2023. So right now, by the next 6 months, we only expect about 40,000 square meters of net leasable office space to actually complete by the end of 2022. And this slowing down actually is a good sign. It actually helped the market to take some time and absorb the available space. And as an evidence, the average occupancy rate across the centrally owned offices in the second quarter of 2022 stayed roughly the same as the first quarter at an average of 67% in this quarter. However, it's also important to mention that all of those delayed stock will still continue to finish in 2023. And by then, by the end of next year, we expect to have a total supply of almost nearly 1 million square meters of office space in Phnom Penh city. And 40% of the 1 million square meters will be strata title offices, and they are of a different nature than the centrally owned offices that we're more familiar of. So they definitely will bring a new dynamic into the office market, which we ourselves are very interested to continue to observe. If you look at the rent, with the buildings located in the central business district, can still be able to maintain their quoting rent to be at the same level as the previous quarter. However, buildings outside of the central business districts continue to feel the downward pressures in terms of their rent. We have seen landlords for Grade B and Grade C offices outside of the CBD area offering lower rents of between 3% to 8.7% in order to capture tenants who are taking this opportunity to expand their office expansion and moving outside of CBD to capture the lowering rents. If we look at the GoGo Mobility Tracker, the residents in Phnom Penh started to go back to the offices more than pre-COVID level since the beginning of 2022. And this trend has been continuing to increase slowly but steadily. And right now we are about 10 to 20% lower than pre-COVID level, and also higher than pre-COVID level, and also higher than our other major cities in the region like Hong Kong, Singapore, Kuala Lumpur, and Bangkok. So in overall, for the office market in the second quarter of 2022, it's fair to say that it has been resilient so far. With the signs of supply slowing down, no new completion, it definitely helped to support the level of occupancy rate to remain stable. And at the same time, some tenants still continue to take this opportunity and offering lower rents. in order to pull tenants from the CBD and from other offices in the non-CBD areas who are looking to relocate and upgrading their office space from grade C to grade B. So this trend in flight for quality continues, especially now that there are so many better quality stocks in the office market. And at the same time, in this very competitive climate of the office market, one key selling point that landlords can use to stand out is to offer more incentives to their tenants. And some of the most popular incentives that tenants really like are offering more parking space, having longer free rent period, and also having free management fee in the first 6 months or even up to a year, depending on the lease terms. Now let's move on to the retail market. So similar trend as the office market, supply also starts to slow down in the retail market. There was no more new launch announced in the second quarter of 2022, and there was one completion, which is a community mall at known as Chipmong 598 Mall at one of their Borei developments in the north. And as a result, occupancy rate picked up, although only slightly, from 67% last quarter to about 68% this quarter. And this is probably the first time since 2020, and mainly supported by the increase in occupancy rate across our community malls, mainly. In terms of supply, by the end of 2022, so in the next 6 months, we expect to see around 190,000 square meters of net leasable spaces coming online, increasing the total supply of retail spaces by 30% to around 800,000 square meters. And most of these new supply will be of shopping malls, mainly from the two major shopping malls in the south, Eon Mall Mientai or Eon Mall 3, and the Chipmong 271 Mega Mall. Different from the office market, these major future supply, most of them has already secured their tenants. So we don't expect this upcoming supply to put as much impact or pressure on the occupancy level of the overall market. In terms of rent, as occupancy picks up, rents continues to correct downward at around 1% to 4.8% specifically for the retail podium. Another positive story we see from the Google Mobility Tracker is that shoppers in Phnom Penh continue to go shopping, and this trend picked up since around April 2022 and continue to stay above pre-COVID level and above other major cities in the region. And in terms of the retailers, they also continue to stay active in their brand expansion activities. In Q2 2022, we saw 30 new shops opened by international brands, and they range from F&B, convenience stores, specifically 7-Eleven, and some fashion stores. We also recorded 16 new shops opened by local brands, and again, mostly the famous F&B, but also supermarket and convenience stores. Most of them goes to community malls, which, as mentioned, help increase the occupancy rate of the community malls. So the overall trends in summary, there are the changes that matters in the retail market in Q2 2022. First one, convenience store and supermarket dominates the expansion. This trend actually started about 3 quarters ago, around mid last year, where new convenience store brands coming in and pushing the competitions pushing the existing brands to also try to expand their branches and capture the increasing demands from the working adults in Phnom Penh who start to have a new lifestyle of wrapping their necessities or buying their quick groceries on the way home from work instead of just going to the shopping malls. The second trend is the community malls continue to be the kind of mall that has the highest occupancy rates among other types of retail schemes across the market. Other types of retail schemes like retail podium and shopping malls actually sees either stabilize occupancy rate or drop slightly. Footfalls that picked up earlier this year also starts to stabilize, and that is definitely with the help of the effective vaccination program rollout, and this continue to keep retailers and shoppers confident to expand their brands and to continue to go shopping. That is all for the retail and office market. I will now invite Ms. Kinkesa, our Associate Director of the Research and Consulting Services, to walk you through our residential markets.
Thank you, Daluch. Good morning, ladies and gentlemen. My name is Kinkesa Kim, the Associate Director of Research and Consulting Department of CBRE Cambodia. Thank you, Daluch and Lawrence, for the comprehensive brief on the economic overview, industrial view, and also commercial real estate market. Now, this is the last sections of our presentation. We're going to look at the residential market, which comprise of up to 3 segments, sub-segments. First one that we're going to look at is the condominium market. In the condominium realm, we saw 4 new completions of condominium projects. This is a continuous trend from last quarter that we saw another 3 building was handed over. What is notable and different in this quarter is that we also saw 1 new launch of a mid-range project inside Bang Kingkong district. Now, if you were here in our fearless forecast of 2022 back in January, there was 1 bold forecast that we made. That is no new launch of high-end condominium in 2022. We know that it's a bold statement. We don't want you to be over alert, but we do see the reason for this forecast because of the remaining unsold stock inside condominium market. I think across the industry is quite understand that a lot of stock in the condominiums were not absorbed, and also see some delays of constructions of projects inside condominiums. So in fact that we have 1 new launch coming into the market in this quarter. This is the first launch in the first 6 months of 2022. Is quite a significant move. Continue on the supply, the total supply situation for condominium market. We are actually expecting the accumulative supply to reach about 48,000 by the end of the year. With the 4 new completions, 4,700 units were added into the market. This is quite an encouraging sign because the construction is still progressing as it should be. Additionally, we also see 1,200 units being put back from projects that were on hold in the previous quarter and previous years. This is only from 2 projects that were relaunched in the past 3 months, but we are expecting to see more of this to come back online in the rest of 2022 and perhaps continue in 2023 as well. I will discuss further on why we think this could be the trends. Just a little bit more on the total supply situation. I should highlight as well that the forecast for the remaining, for the whole 2022 now from our team is 14,000 units to be completed in whole year. This is a rise of an increase from 13,000 that were initially forecasted in the early of the year. The reason is again the relaunch of the project that were put on hold coming back online as adding more expected completions to this year. In terms of average quoting price, we saw rebounds across all subsegments of condominium market, from affordable to mid-range to high-end. Most notably is in mid-range, which we saw 2.7% increase in average quoting price. On the rental side, on the left-hand side of the slide, we also saw an increase, an uptick in the rental rate across the segment as well. Now, this is very notable because this is, if you look at the past trend in past 5 quarters, this can actually be the first quarter that across all segments we see a consistent price increase after a continuous downward trend. Reason for this increase in both average quoting sales and quoting rents, we think are because of the pickup in confidence in the market, especially resulted from the control of the pandemic situation inside Cambodia and the successful vaccination rollout. For example, the first real estate expo that we had last weekend was the first one that we had in the past 2 years. And now we also see sales galleries and developers being very active again on promotional activity. As Daluch mentioned earlier, retail footfall has also picked up, as we've seen from the Google Mobility. A lot of developers right now, if you go to one of the shopping malls in Phnom Penh, you will see at least 2 or 3 booths of real estate projects inside the mall. Most of them are landed property and condominium projects. So we think all of this coming back to the normality allow our developer to be more expressive and to engage with their buyers more and kind of increase in terms of quoting price a little bit. I should also highlight that this is in terms of quoting price, although we see some upticks, but heavily, marketing activity, especially coming with promotional and promotions and discount, are still being quite aggressive inside condominiums. So to say that the price has really come up or come back to the pre-COVID level, I don't think they're there yet. In another aspects of high-rise residentials, we're looking at the service apartment market. So in this section, we are covering 6-month change. In the past 6 months of 2022, we saw 3 new completion of service apartment, combining to about 400 units, adding to the total supply. Notably, we see the opening of Citadine Flatiron, which is one of the first international brand operator that coming into the market in a very long time. We also saw 2 new completions of very good quality TK Central in Tu Quoc district, and also Jasmine resident inside Bangkok district. By the end of 2022, we are expecting the total supply for service apartment to reach about 3,800 units. And this is still quite low if you compare the whole market of, the total market supply is still less than 4,000. And this market is still small if you compare to the nearly 40,000 units of condos that we are expecting. What is also notable is that the majority of the service apartment supply are still being operated by local developers and operators, while only 21% of them are being operated by international chain. So this actually an opportunity or a supply gaps that we saw, because a lot of demand from the market is actually going after the international quality, international service, and international standard of amenity that being provided to the service department tenants. So, we also start to see some interest of international brands operator coming into discussion with the existing service department building that already been operating, and with possibility in rebrand or renovation of those existing building and make it to become an internationally branded operation. On the price aspects, we are looking at the right now in this graph is the average quoting rents for both the grade A and grade B service apartment. Within that, the average quoting rents for grade A is ranging between about $20 to $25, while grade B is ranging between $13 to $16 per square meter. If you compare, this is still quite high compared to the rent that we saw of between $8 to $13, sorry, $8 to $11 in the condominium aspects. This price has also been increased by about 1.5% and 2.4% for grade B and grade A respectively. We got asked a lot whether the new completions of condo will come as in competitions with the existing service apartment. To our experience and observation talking to developer and tenants on both sides, tenants are still going after the qualities of services and amenity being offered to them, especially in the central location and prime locations such as Bangkok Kong and Dong Peng area. Many of the tenants are still going after the quality and the international experience that they are expecting. So in short, we think that while condo may appears as a competition in terms of price and providing more range of options for the tenants, to be able to compete at the same level of service apartment is probably quite a long way to go, including due to the service of quality and amenity provided. Overall, key trends that we saw in both condo and service apartment are presented here. First of all, we saw that moving in conditions in condominium has just got even easier. With a lot of projects coming into completions, we saw that the remaining units are now being also pushed out into the market. So in some instance, we saw that buyers can put down only 20% down payment, and while the building is finished, they can move in. So with the, I think with the a lot of completions that are coming up online this year, developers now are adjusting their sales strategy, because previously, obviously, sales strategy between off-plan sales and completed condo unit must be different. So having the completed unit being moving ready is actually quite a encouraging selling point for all of those condominium projects. This is also why we think that any new launch of condo coming in this year probably having a hard time to compete with the projects that are being completed or close to completion. The second trend that we saw is rents are being recovered or rebound in both service apartments and condominium because of the return of many expatriate occupiers. Also, the slight uptick in movement of Cambodian tenants moving into condos and service apartments, although the proportion is still quite small compared to the expatriate tenants. The last trend that we also saw in both markets is the interest of international operator, as I mentioned earlier. We're also expecting at least 500 other units to be completed in the following quarter. All of them are coming from renowned and established and experienced international operator. Moving on to the last subsegment of residential market, let's have a look at what happened in landed property, or locally known as the Borei market. In the past 3 months, we saw 10 new launch of Borei projects and 7 new completion. Now, if you recall from our presentation in Q1 2022, we saw actually up to 39 new project launch during Q4 2021 and Q1 2022. Obviously, the 10 new launch here is substantially lower or fewer than what we saw in the previous quarter. Our observation for this is generally the optimism at the beginning of the year were actually higher than now in the middle of the year. So actually a lot of projects that were hold in terms of launch in 2021 and the new exciting project decided to come up to the market at the beginning of the year. This is also why we see less launches in the second quarter. What also notable in this quarter is that the 10 new launches are all from high-end and mid-range segment, and none of them coming from affordable segment, which is an opposite from what we saw in previous Q. Affordable has been quite aggressive in expanding and opening. In terms of completion, in the second quarter, we saw completions of about 1,700 units coming into the market. That is also equivalent to about 37% of the 4,600 units that we are expecting within this year. And with the 7 new launches that we saw earlier, they are adding another 1,000 units into this market. While we continue to see expansions of Borei supplies, several of our clients who come to research and investing start to ask whether it's a good time to launch a Borei now. And what is the strategy to stand out in the pool of very hot competitions? Actually, it's a very hard question right now because buyers have plenty of options ranging from location to design to pricing, and the promotion is also quite aggressive, which we will see in the next slide. So our answer to that very short answer would be the delivery of a value and quality to the customer. I'm sure you have further question. If you have further questions about Borei, we're happy to discuss during the panel discussion. In terms of pricing, we actually start to see some impact in terms of price coming downward in this quarter. So price decrease on the left-hand side there is coming down in between 1.7% to 4.9% after very hard competitions in the past 9 months or so. Although the price range in between each unit are still quite stable, but the average pricing is coming down slightly. As a trend, we are seeing developers being more aggressive with their discount. But on top of that, payment options and the promotional package is also gotten more aggressive as well. For example, we see the buy house free car trends is becoming very common right now, especially with pay off option. And as Lawrence mentioned earlier, with the automobile industry being expanding in Cambodian market, developer has just decided to work with automobile suppliers to make their Borei more attractive. We also saw emerging activity of trust company coming into the landed property. This landed property by here I mean trust facilitating both the landed Borei projects and the landed land outside of the Borei project or inside a project as well. So far, we know that at least 12 to 14 trust companies are opened and are being regulated by the SERC. I think that this has become a new tool for landed property developer who are offering a high quality of a product to open up to the international buyers. Although the response and demands of international buyer is what we're going to, what we have to observe and see in the next few years. We also get asked a lot in our research and consulting team, as well as our residential sales and marketing, whether the Borei market will follow condos path. This question arises with the very hot expansions of Borei market in 2021 and also early 2022, because right now we're seeing so many Borei coming out, small and big, from established developer, from new developer. Whether or not Borei is going to reach the similar level of saturation as a condominium is what we are looking at closely. Although we see that the point that it's different between landed property and condominium is that landed property developer has some flexibility in their cash flow and construction progress. Given the horizontal format of development, they can pause and stop and or resume the projects or manage the construction progress as according to the sales progress. So it's less complicated and less binding as in condo, where you have one tower that you have to complete it regardless of whether you sold 50% or 30% of them. So that is all from my presentation. Thank you for your attention. Our presentation today cannot happen without the effort of our team, who have been working very hard, and we still have so many changes on the slide until midnight last night. So please give our team a warm round of applause. Thank you. That is all. I'm over back to Paula for the next agenda. Thank you.
Thank you, Ms. Kinkesa. Wow, what a quarter. So many movements in just 3 months. Thank you all. Thank you to the three presenters for this lovely, wonderful, and very informative presentation. Ladies and gentlemen, let us give them a warm round of applause again. Thank you. Now, in a few minutes, we will begin with our panel discussion that I know most of you here is probably looking forward to very much. But before we can do that, we're going to need some time to set up the stage. So we're going to move some of the chairs up for our panelists to come up. So our team. In the meantime, I'd like to invite everyone to pull out your smartphone and join us on Slido. We have prepared 3 questions for you today related to real estate. Right. Okay. I think we're good to begin with our first question. Please vote, everyone. First question is, how was your coffee this morning? Oh, I'm glad to see that everyone is feeling the coffee this morning. Tea person, wow. Okay, that's great. All right, I think the majority of us here loves the coffee this morning, so glad to hear that. I think we can move on to the second question. Second question is, what do you think will happen in the real estate market for the rest of 2022? So this is a multiple choice. You can select more than one answer. Oversupply. Yes, we see a lot of that in the trend for now. Price will decrease. What about pricing will increase? Do we have any of that? Less of inflow investment. Okay, I think we could say that a lot of people think there will be an oversupply in the market in the remaining of 2022. So that's very interesting. All right, thank you. Let's move on to the final question. This is a very important question, everyone. What asset are you investing in 2022 or planning to invest into? Good sit on my money. Wow. Okay. Land and property, land. Wow. Okay. Land seems to be climbing up again. What about gold, everyone? Gold and industrial or condominiums. Do we have any of that here? Okay, I think that's settled now. Majority of us think land is a good investment for the rest of 2022, which is fair enough. Land is has a good value. It often appreciates in over time. Right. So, okay, I think it's good with the questions now. Thank you. Thank you, the audience, for your wonderful participation in our poll. And I think now we can move on to the panel discussion. And for that, I'd like to invite Mr. Lawrence Lennon, Mr. Lawrence Lennon, Ms. Kinkesa Kim, and Ms. Daluch, and Ms. Sraining Chum to the stage for our panel discussion. Thank you.
Thanks, Fella, for that very energetic readout of the poll results. And thank you again for everyone joining today. So I'll go through a few of the questions coming in on Slido. I'm sure you can see them coming up in a second. Great. So as mentioned, I'm joined by Kinkesa Kim, who heads up our research and consulting team, Daluch Chin, who heads up our valuation team, and Sraining Tim, who heads up our office leasing team, just for a bit of context. So the first question I'm going to read out today is it a good time to build an office? And I'm going to aim that at Sraining. So I'll let you take that one. Thank you.
Thank you, Lauren, for the question. So as Daluch mentioned earlier, that because of the some office building being delayed into 2023, there is a good opportunity that let the demand to observe the supply that being existing. So to answer that question, I don't think it's a good idea now to like invest in building an office space, but instead of building a big or high rise, I would think or suggest something minimal like 10 floor office, industrial concept style, or probably a build-to-suit option to a tenant that is currently existing in the market.
Thank you, Sraining. Just to follow up on that, maybe you could expand on the potential opportunities that are unfolding as the supply increases. So as rental rates decrease and the quality increases, could you tell us a little bit more about what might happen?
So with the supply increasing, obviously that what we see in the market now, the older building which has been built like from 10 to 15 years ago have been struggling because most of the clients will start looking to upgrade their office space. And with the supply keep increasing and the rent was like going down, so most of the tenants take this opportunity moving out of the building. But at the same time, we also seen that the building have been built like 10 to 15 years ago, start develop themselves, renovated or upgrade the building in order to maintain their service to their existing tenants.
Also like to add on that as answering to Lauren's question about any opportunities arising from the increasing supply and lowering rents is that it pushed the office market to be more competitive, landlords to keep providing better quality stock. So it helps the whole Phnom Penh office market to be more professional when we compare to our regional peers in the cities like Ho Chi Minh, for example. So it's also a advantage or an attractive point to attract new companies, international companies, to also see Phnom Penh as also a potential expansion.
While you have the microphone, I'll aim a question back at you, Daluch. This follows on from the commercial presentation you gave.
So I'm going to reword this slightly, but how do you see the new retail supply coming online potentially being occupied over the coming year or so?
Thank you, Lawrence. So as we have mentioned, the new future supply that we expected are from mainly they are shopping malls, and insights we have seen is that those malls are big players, and they already secured most of their tenants before their official opening dates. So we expect the new supply not impacting the overall occupancy level too much.
Thank you very much, Daluch. A question for Kinkesa now. I'm sliding to find what I'm anticipating is going to be an outlook for the residential market. Could you give us a quick overview of what you expect is going to unfold in the condominium market over the coming year?
I think we discussed this during the presentation as well. I think new launch is going to be slow in at least in the condominium aspects, as a lot of existing stock are still competing, both completed and under construction stocks. At least that is one trend that we are quite sure of. In terms of price, I think there's still a mixture of response from various projects. Some of the projects occurs some price reductions and promotional activity. The demand actually quite picked up, especially among local. But the same strategy hasn't been successful in some other projects. So I think the pricing alone, while it's the defining factor, it's probably not the only defining factor. It still comes down to the original plans of the projects, whether you focus on delivering the value to the buyers and tenants of their projects, and whether how well the project was designed to fit into the local context. Because we saw this issue with a lot of projects that were quite focused on the international market, coming from even the layout, the amenity, everything that were firstly designed were catered toward the international, whether it's Singaporean market or Chinese market, and left behind the local consumer. And now they're having a hard time adjusting to the local market.
Thank you, Kinkesa. Another quick follow-up, from a question on the Slido. So, where are you going to put your money, in a condo or a beret?
Very hard question. I think actually in the market situation like this, diversification is very important. This will be my personal advice to any friends or relatives of mine. Looking at different aspects of real estate, land is probably still the one that is quite assuring for most of us as Cambodians. Locally, culturally, we still love land. Also, with infrastructures that are being come up, like Lawrence was presented in the presentation, infrastructure actually open a lot of opportunities for new areas of land, especially in the industrial potential area, such as the southern Phnom Penh and the surrounding province of Phnom Penh. Although watch out for the price speculation and speculations, because it has been some false news or unrealistic expectations of that project coming out. But if you look at the fundamental factors, land is still one of the options. I might look into condo and landed property as well, if the price is well priced and the value that being delivered match up with the price. That would be my personal opinion.
Great, thank you very much, Kinkesa. A question for Daluch now. What have been price trends for land in and outside of Phnom Penh in the past 6 months? Will this trend change or carry on towards to the end of the year? And maybe you can spread that out to further into sort of the next 5 years or so.
Continuing on from Wonkasa's one of her preferred investment in land. So land prices in Phnom Penh has been, let's say for the past 10 to 5 years, has been increasing non-stop in Phnom Penh, central city. However, from 2020 until now, we have seen the price to stale and start to stable. It hasn't dropped yet, but the central area, the price has been stable. Outside of Phnom Penh, however, we have seen in some area where there are future expansions or future or ongoing infrastructure developments, price actually still continue to go up. And I expect it to also continue to go up towards the end of the year. 5 years is a long way to forecast land prices, considering the office real estate market in Cambodia changes very quickly. But if the infrastructure continues to go progress along as planned, I expect the price to continue. And very importantly, land value links to what can be built on the land, links to the amount of supply and demand, and that a critical point that limits supply of land in Phnom Penh is the regulation, the urban planning. So we have been stressing this, talking with private parties, key players in the real estate market, and also relevant local authorities in terms of how important it is to have a structured urban planning policy and strategy in order to manage not just the land price, but also the overall oversupply issue in the city.
Just to sort of add on to that, fundamentally in most of Southeast Asian nations, you have strong fundamentals, and this is going to massively tie into the growth of all segments of the real estate market. Cambodia has an average age of 27, which is quite unbelievable. So that indicates that the working population is going to remain active for the next sort of 50 years or so, which is much longer than can be said for a lot of the maturing and aging nations like Japan, Korea, even China. In addition to that, Cambodia's only got 26% urbanization rate. It's a pretty strong indication that people are going to continue to start moving or to continue to move into urban areas. More developed nations have an urbanization rate of up to 50% plus. So there's a very strong indication that pressure is going to continue to rise, demand is going to continue to rise, which will transfer into land values. And these are the exciting things about what makes Cambodia an interesting market. So just to follow up with a next question, before I think we should move into the audience a little bit because I'm getting sick of the sound of my own voice. So one final question for Kinkesa and Daluch. Any solutions for the oversupply issues?
Thank you. I'm honored to be the first to answer this question. This is a very, very difficult question. Oversupplies can mean very different things across different segments. It can mean differently for office, can mean differently for condo and service apartment or boutique. I think I might pick up some of the quite straightforward solutions is the potential conversions of this traditional usage into something less traditional, and maybe this is already established in other markets. For example, things like data center, student accommodations or even, school or healthcare facility that have been actually been in much demand across Cambodian market, but we've seen still, limited in terms of quality supplies of this. Pick, for example, data center is a rising sector, as we see a lot of e-commerce company, bank and insurance are growing. A lot of conglomerates are growing as well with their multiple business line. We understand that several of the big business group in Cambodia has started to build or started to study their in-house data center, but we haven't seen an actual commercial data center being built or being studied yet, in at least in around Phnom Penh. So that is one of the potential options. Another potential option, probably looking at the schools and healthcare facility, which can probably fit into the existing office supply or retail supplies. Anything that, if you design it correctly, will fit into the atmosphere of the office worker and the mall visitors or shoppers. I think this probably more complicated than my simple answer, but it is not impossible, and with a proper study and proper advice from a specialist of this industry, it can be done. I think that's probably one of the most viable and straightforward solution for the oversupply issue. Other solution, probably not building too many at too short time. I think this comes down probably to the regulation and urban plannings with, within our city and country. Land use, although we have some guidelines to define the land use type, the implementation is still very hard to impose, especially with very rapid development going on in the market right now. I think Daluch, Senior, and Lawrence will have further idea on this as well. So I'd like to hand over.
Just to add on a little bit from what Kinkesa said regarding the alternative uses of those oversupply stock. Just one more point from the valuation point of view. It's painful to reduce rent, but it's better than leaving the space empty. From valuation point of view, it's more valuable to have tenants paying some rents rather than no rent income at all. So yeah.
That's a particularly interesting trend that you see throughout Southeast Asia. Landlords very much willing to just leave their space empty. It happens in Vietnam, it happens in Thailand, it happens in Myanmar. So it's not necessarily unique to Cambodia, but it's probably a reflection of where leverage lies. Because a lot of developers aren't necessarily leveraged in this market, it means they're able and they're comfortable to leave spaces underutilized. One question I'm surprised I haven't seen today, it relates to the trust developments that we're seeing in Cambodia. And this is not a particularly easy question, but I will throw it back to Daluch and just sort of give some thoughts on what you anticipate to occur in the development of this trust structure that we're seeing.
So recently there has been a real estate trust being established in Cambodia, which allows foreigners to also buy landed properties specifically. We see that this will help with the demand of the landed property segments to some extent, but we still see that there's still going to be limitations in terms of number of foreigners who are coming in to buy landed properties because of the larger unit size compared to condominiums, and the number of foreigners who will be relocating into the city and with their family is still limited. So while this definitely starts an opportunity, I think it's a good start for the real estate market in Cambodia. However, in the short term, I think it's still limited in terms of new demand.
Just to sort of follow up on that, one thing I find quite intriguing about this new trust development is the lack of definitions and the lack of clarity. Even to this day, when I'm talking with lawyers, they're not quite sure how this will actually be applied in practice. One area that I think will need addressing is the definitions of what can be owned in trusts, because currently it's very ambiguous, and currently that means it can apply to almost any type of property. And once again, you know, in Cambodia, it's in many respects, it's almost like a perfect free market, and that comes with costs and benefits. And what concerns me is the lack of definition, because, you know, does this trust law apply to whole buildings? Does it apply to infrastructure like ports? These are really key questions that need to be raised, and definitions need to be found before the floodgates are opened. I'll leave that ambiguous statement there. I think it would be great if we could get a microphone out into the audience if anyone's got any questions. Could anyone that has a question raise their hand, and we'll do our best to answer it. Bit of enthusiasm. Come on, someone's got to have a question. No questions. Are you kidding me? That's quite unbelievable. I don't think I've ever been in an audience before and not had a question from one person. So we'll go back to Slido and see what we can do. How are we doing for time as well? Okay. So this is not going to be a particularly easy question, but can the real estate bubble in China spill over to Cambodia? And I'll throw that one over to Kinkesa.
Well, another difficult question. It's a very complicated issue. I'm not going to pretend that I'm an economist and being able to cover all the aspects. Just in my personal view, there are some linkage in between China economy and Cambodia economy, looking from the investment flow perspective. The issue, anything happen in China as well as other major economics, including US, the Eurozone, will have impact in Cambodia. Just in the slide that Lawrence presented, we are not an island. But to what extent that this spillover would be impact, have this power into Cambodia? Honestly, I'm not quite sure, because if you look at the linkage in between, specifically inside real estate market, although the majority of fund inflow from into real estate are from China, but we also have quite a diverse pool of investment from Singapore, from Hong Kong, from other part of Asia and the other part of the world as well. But if you look at the demand aspects, similarly, especially into the high-rise development, the majority market can be said China, although there's no actual number to back that up. But there's also a large pool of buyers and investors from the rest of the country as well. What we generally see is a condominium built by Chinese developer might have the majority of Chinese buyer. Condominium built by Japanese developer will have a majority pool of Japanese buyers. So I think the demand market is quite contained in some way because of the diversifications in the buyer pool. But I'm more concerned about the overall economic impacts. For example, the impacts onto the purchasing power of Cambodian as a whole, the income, the disposable income of Cambodian buyers, also the inflation issue, the hike of interest rate. These are all another set of issues that can impact both the demand for real estate as well as the capital available for real estate developers. So I would say that those are the aspects of risk that we should watch very closely instead of direct linkage in between real estate issues in China and Cambodia. Thank you. Anything to add, Daluch?
Pretty comprehensive answer. Thank you very much, Kessa. I think we are probably coming to a stage where we'll be closing things up. So I'll just, we've got one question over here. I'll bring the, okay, we've got a mic over there.
Yeah, thank you, Lawrence. Anthony from EAC News. My question is, so far today we spoke about Phnom Penh, but the growth is just not in Phnom Penh. We'll have a look at Sentinelville is now exploded. What about Kampot? Now it's been approved, the new port's coming into Kampot. And one place we haven't mentioned is Siem Reap, with the new airport coming in Siem Reap, and the land has been sold. New investments have come up towards Siem Reap. What do you see in the future for Siem Reap around the new airport area, which what everyone is saying in Siem Reap, it's going to be the new Siem Reap. It's going to take over from the old Siem Reap and explosion. We have where it is, new casinos have bought land up there and big investments. What do you see the growth and everything up towards that way?
I'll make an initial comment and then see if any of my colleagues want to follow up on that. Over the course of the pandemic, we've definitely seen an increase in interest in these secondary markets, and that's probably something that's quite interesting. So we've seen growth in terms of sales in Kampot, in Kep, and Siem Reap. When you look at Siem Reap as a market, I find it particularly interesting because of the organic growth that we see that occurs there. When people come to Cambodia, actually, for the most part, unless they're here to do business, if we're honest with ourselves, the large portion of those travelers are coming to go to Siem Reap, to go to Angkor Wat. If you look at the average stay of people or of travelers when they come to Cambodia, it's around 1.5 days in Phnom Penh and then around 4 days in Siem Reap. So that shows us a really strong natural draw to the unique nature of Siem Reap. And that's likely going to be tying into things like the development of second homes, of unique formats for real estate developers. So in Vietnam, for instance, you see a lot of condotels, and they're not necessarily only in the format of selling units in a condominium style format, but also for landed property, which is then operated like a hotel. And that's something that we're likely to see in terms of new formats and new opportunities for developers to explore in these secondary markets. Anything to add?
Just to add on to Lawrence's comment, I think the future of Siem Reap still lies closely with the tourism and hospitality market. I think at least that factor we can generally agree on. The fact that you mentioned there is a new airport and then there's a potential new city coming probably in replacement of the old city. I'm afraid that's not the case because I think what likely to happen in Siem Reap is the coexisting of the new and the old city together, because I think this is the case elsewhere with, you know, look at the case of Saigon, a tourism and cultural kind of city. Having new excitement of a new development is one part that can complement the organic historical identity of Siem Reap itself. So just to cover on that part, I think both cities could potentially coexist and as you know, work as complement to each other. Also, totally agree with Lawrence on the comment of potential condotel format or not so condotel format. Anything other thing to add?
So I think that probably wraps up proceedings for today. I'll just hand over the microphone to Fala to close things off. Thank you very much for attending today. It's been a great session, and we really appreciate your attendance and your questions. So thank you very much.
Thank you to all the panelists for this insightful discussion, and thank you to our wonderful audience for your very interesting questions.